All right, welcome back to the channel, everyone. Let's take a look here at the NASDAQ futures for all those that trade the either the micro or the E-mini futures, in particular the indices. But it doesn't really matter what market when it comes to the futures trading. You know, it could be commodities or currencies or the financials. It doesn't really matter. I mean, the way I trade and the strategy and how I use is just basically looking for confluence across, charts to trade with. And it's just a matter of scaling down, marking your zones up, and looking for the right entry points when it comes to supply and demand, because that is universal. And it doesn't matter the market you trade. You're going to see supply and demand setups no matter the market, no matter the time frame or chart you're actually using. But I'm going to show you in this video here the trades that I took today, all of them which were short trades because the market was breaking down. Now, even looking at a higher base chart, you can see that there was loads of momentum when the market was selling off to the downside. Even though we did not break through any key area, meaning even a minor area, a structural break on a higher base charts, if you start scaling down, you'll start to see where on lower time frame or lower base charts where the market actually broke through minor areas of structure. So once you see a structural break to the downside, even on a lower base chart, you can look for opportunities to trade short, even though the higher base chart may be still showing you sentiment to the upside. Now, yes, this is a form or a means of counter trend trading, but we've had a lot of selling activity today. A lot of things going on. We did have some news today that dropped, so that did cause the markets to kind of flush to the downside. But you have to be pay attention to those type of things. What's going on in reference to the economic news events or on the calendar? Whether it's PMI, CPI. Unemployment numbers, FOMC. So I typically like to stay out of the markets right at or close to those time periods until things, the volatility kind of slows down. But let's take a look at the few trades that I did take. I'm just going to kind of go, not in great detail, but I'm going to break them down in a sense so you can see the trades that I took if you aren't part of our Discord community, because I posted these same trades, 1, 2, and 3, which I'll show you in this short clip of the video, and I'll be kind of narrating through the video as we go through the trades. But if you're interested in joining the Discord, that's where you'll see the trades that I actually take and post over in the Discord, not just myself, but as well as other people who are traders that are part of the community. So but all three of these trades I posted over in the Discord today. So let's walk through the trades. First and foremost, what I like to do is just kind of give, again, a synopsis of what's been taking place in the markets, and we have been pushing to the upside. All right, we been breaking areas of structure, meaning taking out higher highs, pulling back. Now this is my 120 range chart, and I trade range-based charts, not time, tick, or volume. And I don't know what charts you may trade, and how they're in comparison to the charts I trade. So I don't know as far as what time-based charts may be comparable to the range charts. You have to spend some time, or maybe even ask some of the Discord members that are part of the community that do trade time-based charts. The Discord is free. Again, it's down in the description portion of the video if you're interested in joining. But I saw this movement to the upside, and we're still bullish overall sentiment-wise. I just said that a little bit short bit ago. But still, again, there's opportunity if you know how to trade and you start scaling down to lower base charts, especially when you see lots of aggressive selling to the downside. You can look at your lower base charts, and you'll start to see like here in my 24 range where it starts to break through key areas of structure to the downside. This is a minor area of structure where the market broke to the downside here, as you can see. So it started taking out structure to the downside. All right, and as long as we're taking out structure on lower base chart, and we've got loads of momentum where of a sell-off or the market selling to the downside, just look for key supply areas of which the market can pull back to and go short. All right, so what I did was I looked at my 120. I said, okay, we're still bullish here. I looked at my 60, and it looked like we started to definitely still showing movement to the downside here. And then when I scaled down to my 24 range, that even gave me a bigger picture, not say bigger picture, but more of a bias to say, okay, I can start to look for some counter trend trades going short. All right, even though the overall higher time frame again is bullish. So what I did was I saw as the market was breaking lower here, we broke through area structure, made a lower high, broke structure here to the downside, pullback. We once again broke structure lower here. Now this was a pullback where you could have went short right here on this pullback to this key area right around 922. I'm not saying the time, I'm talking about 18,922, the price level right here, or 923. You can see the market sold off. But the short that I actually took, and I saw that, after we broke through this area structure right here, broke through all that, and I started seeing we continuously broke structure to the downside. I said, okay, we're in a trend or a short period or trend to the downside right now on the 24, even though again on the higher base charts we're still bullish. So when I saw this pull back to this area right here, and then it broke structure again, I started looking right here and I said, okay, there's some areas where the market needs to fill right here. All right, you see these gaps back down to this area right here within the market. Okay, so there's a little swing level right here. So I said the market's going to, if we get a pullback, all right, to some key area after we broke this area structure right here to the downside, a pullback to an area of supply, and there's an area of supply which was resting. I'll show you right quick right here. All right, I was a little late on this trade. The trade should have actually been right here around about 906, 18,906. I don't think I got into the trade until like 900, I believe. So, right as the market was breaking below that round number. But I saw opportunity to where we still had to fill this area in, and we were bearish on the 24 range chart. Okay, breaking structure to the downside. So at 900, I jumped in, got in, and I took it on down. And I believe it was like I'm gonna show you the video clip right now. We're gonna go ahead and go through that. So let's go ahead and pull this over. So this was the supply zone right here. All right, so let's play it out right here. Oops, sorry about that, guys. Let me see what's going on. For some reason, it's not playing back. All right, so here's the video right here, the clip. Put my stop back here, right around where the supply zone was at, and then it runs to the downside. I only got filled on one contract here. I was trying to go in for two, but it left the second contract behind, and eventually we do get filled here on this trade to the downside, aiming for to fill these gaps into the left-hand side of the chart, like I said. So this is the next trade setup right here, which I'm going to go over. Again, another short opportunity here. One thing I was noticing in particular when I got to the second trade, which I'll bring the video over here in a short minute, was this area right here. We had this overnight gap where the market at the opening of the session from yesterday's close into the overnight session, we had this gap right here, and I said the market's going to want to fill that area in. And looking at the bearish movement that it was making to the downside, especially after the news event today, it's going to fill that area in, that gap in, and then maybe push back to the upside. But anyways, on this trade setup right here, when I saw the market, this was the first trade setup, when I saw the market start ramping back to the upside, and I saw that we still had this opportunity to where we're still bullish on bearish on the lower base chart. I did say when we started, breaking back to the upside right here, but then when I saw that it broke lower and then broke this area structure again back to the downside. So again, small area, it's a minor area structure break here to the downside. It pushed lower and then it pulled back and then it broke right here, lower right here. Now this is a minor structure break here to the upside. To the downside, but there's a supply area right here on the 24 range chart that I had marked up or was paying close attention to, was right here. All right, so when it pulled back to the area right there after breaking through this minor area structure to the downside right here, and then we had a slight structure break right here and a pull back to this supply area, I went short, and I'm gonna show you that trade right now because this one was for like a 28 point pickup. Let's go ahead and, whoops, sorry about that. All right, let's go ahead and play this. So as you can see here, this was the trade right here. I got in at 887. It pulls back to this area supply. It's running lower. I'm getting ready to, and I'm aiming for the area right in this zone right here. Okay. If you look here, there was imbalances or gaps back to the downside on the 60 range that needed to get filled in. So the area once I took the trade here, this is on the 60 range, you can't quite see it until you scale down to the 24. But I noticed we still had areas that needed to be filled into the backside or to the downside coming off of that supply area on the 24 range. So let's bring back over the video now so we can continue to let the trade play out. All right, so here we are, up like 19 points now. My stop is resting back here with that area supply was resting at. And you saw on the 60 range chart where I was aiming for to fill in those areas back to the downside. So I moved my stop here below break even there to, lock in profit pretty much into where the market can't go back. Now I'm moving back to my 60 range to see where as it tapped in and started filling in these areas of imbalances back to the downside. Now I should have taken out right here, as you can saw, right here in this area here. I'm going back to the 60. So anyways, yeah, it's moving to the downside here, and I'm getting ready to move my profit target back slightly up because we were already at the area where I was looking for it. There it goes down back to 28. So right here is where I definitely want to get out at, and I'm moving my stop back down a little lower. I talk about, positioning your stop loss and where to place it as well in videos as the market is moving in your direction so that you can lock in profit. Okay, so I'm locking in right here on 28 points back to the downside. Again, to fill those gaps in back on the higher base, the 60 range chart. All right, so this is just using, your higher base and lower base charts, using your lower base to get into a trade at an area of supply, in this case here, because the market is bearish on the 24 range. All right, so in this trade here, the last one, this is on the 60 range chart. And what I noticed, I was looking back at the 60 and I saw we broke structure lower. And at the break in this area of structure right here, I was looking back to the other side to say, okay, here's a area of supply right here, and there's one resting right here. But it broke to that area, the first area here, but it pulled back to this one here, like within maybe like a couple ticks, 3 or 4 ticks right there. And I was just looking for a quick scalp. And the reason why was because I told myself this thing could flip around and start wanting to push back to the upside, which it is doing. Reason, case, and point being, you have to see things as they are there already before it actually unfold. So this was just for a quick scalp, and I knew this thing was not going to run back lower because there was liquidity resting right here on the top end. Where the market started on the higher base chart here, the 60 range, or one of my higher base charts, it started pushing back to the upside here, and we had liquidity right here to the top side. So when it came back to this area of supply, I think I scalped for like 10 points. I'm going to show you the video right now, and I was just looking for it to come back down and possibly maybe fill this area of imbalance resting right here. But just a quick scalp for 10 points was what I was really aiming for. So once I looked over at my 24 range, once I was into the as it pulled back and tapped into that 60R supply zone right there, pretty much just a few ticks away. I talk about sometimes being just 2 or 3, 4 ticks away from a zone and it rejects it. I'm going to get in aggressively. Now, I'm not saying I recommend anyone else doing that. It's just my style of trading. But this was a breaker structure, pullback, an area of supply resting right here, aggressive selling to the downside on the 60 range. It pulls back to the zone right here. So I just moved down to my 24R. And then when I saw that the market was showing some bearish sentiment where it broke the candle right here, where it this bearish candle broke, and then the next one started to form to the downside, I went ahead and took it to a very aggressive quick scalp to the downside, aiming for it, possibly filling some of these areas right here of gaps or imbalances down to the downside, and like here and then right here. Now this is where I was pretty much interested in getting out the trade because we did have an imbalance resting right here, or a gap, as well as back down to fill this area here. So there was one here, and of course there's still more below. But again, we're looking at the higher base chart and we see that we have liquidity right there. So I was just looking for it to fill in maybe 1 or 2 of those areas of those gaps there, or those imbalances, and then cut it. So here's the trade right here. Okay, so I'm into the trade. Going short. I remember what I said. I saw that back at that supply area on the 60 range. I saw we started getting some bearish, movement to the downside. Okay, momentum. So I went ahead and took a trade aggressively, trying to fill in some of these areas like right here and right here. And then when I noticed that it was at this point, I was really eyeing and said, okay, we had liquidity resting up here in this area right here. So I went ahead. I saw where it stopped at and started rejecting it. Moved my TP up, my profit target up, I believe at this point here, and was going in for like to 73 or 72. So it was like 18,873, 18,872. And looking back at my 60 and then moving back to my 24 range chart. And that's what I do from time to time, is that once I'm into a trade on a lower base chart, I'm looking out at my higher base chart to see, okay, where could it go to as well. So anyways, this is where I get ready to, I believe, pull my profit target up a little bit, noticing that it's rejecting this area and struggling to kind of push lower. So right here, I move my stop up, my profit target up, and move my stop down. Okay, and then this was like a 10-point trade right here, and it's getting ready to hit the profit target area right here. So just 3 trades today, and that's all you really need to do. when it comes to trading, and that's all you really need to in the market. And even one good trade or two good trade a day. I talk about that in many videos about trading is, a lot of people think that it's all about just having a strategy and just trading and taking breakouts and chasing the market. And you have to get all things right. But the biggest part you have to get right is your psychology and being patient enough to really wait for the opportunities to unfold and being able to really read the market. If you're anyone out there that's struggling with reading the market, do not start trading with your own capital or, even trying to pass these evaluations, because you're probably going to spin the wheel and keep blowing through money. And that's what these companies want you to do when it comes to these prop firms. That's how they're making their money. You got to think about it. They're not making, well, they're probably making a small amount of money or off of, some of these maybe like 90-10, so you get 90, you keep 90, and then they keep 10%, whatever the case is. But the bigger portion of their revenue is coming from these evaluations. They want to get people tied into, keep the wheel spinning. They're betting on you to lose so they can keep you in the loop of continuously spending money to pass these evaluations. You've got to understand how that pretty much kind of boils down to and work. So the key to it all is really, at the end of the day, once you do get funded, if you do have or tied to some prop firm, no matter what level that you're going into as far as a challenge, you pass it and you start to be able to, you pass it and you start to make money, meaning taking withdrawals, then I would definitely recommend moving in the direction of funding your own personal account. All right. Just case in being, because you don't know at what point or period that, the government may step in and start really cracking down real hard and put some regulations in place that cause all these companies to fold. We don't know that, but for all those that are starting out that are beginners, it has definitely been a great opportunity for a lot of people. A lot of people have made significant amounts of money and passed evaluations. A lot of people are part of this community over in the Discord. And again, if you're interested in joining the Discord, find the link down in the description. A lot of people have passed their evaluations simply while watching the videos that I have been putting out, the content, using the same strategy and passing the evaluations, taking withdrawals. So spend some time and watching the videos here in this channel, because I want to see everyone succeed and become prosperous. And at the end of the day, in this business, it's all about making money. Eventually, a lot of people are wanting to shift from maybe working their full-time job to really get into this business of trading and making it a full-time opportunity overall. Okay, but again, I just wanted to cover the videos today that I took, 3 of them short. I had really only taken 2, and then I saw the setup right here unfolding, but I was also eyeing this area of liquidity, which it just ran to the upside. So I was eyeing this right here and just wanted to take a quick scalp. But prior to that, I was already done. But sometimes you see things and you just go for another stab and call it a day. But I hope you had a very successful trading day today for all those that do follow the channel and are trading. And if you're a new person viewing today's video, please take the time. There's tons and tons of valuable information and content on the channel. So I would say and recommend take some time watching the video content. Go ahead, subscribe today, make yourself a part of the community, and come over and join us on the Discord. It is free. Again, that link is down in the description portion of the video. Subscribe right now. Go ahead and make sure to turn on all your post notifications so you don't miss one of the uploads here on the channel. If you found value and you want to see more video content like this, please drop a like on the video today. And last but not least, if you were successful, drop a comment down below. Let me know what type of trades you took today. Did you go short? Did you go long? Were you privy or understood what was going on when it came to market structure today? Meaning, even from a short period, or from I should say a short period, but from a short time frame or short base chart, maybe you trade range charts. Maybe you're looking at the 24. A lot of you guys have shifted from time to over to range based charts and have thanked me for showing you this these charts, okay, this chart style, and you're able to read the charts a whole lot better than you ever been able to. I know with the time-based charts, you see a lot of this wicking and stuff like that going on, crazy activity, and a lot of people have a hard time especially when you see a lot of that on a chart. It kind of gets confusing. But yeah, if you trade range charts, let me know as well. If you had a successful day today, let me know. If you had a bad day today, put it out there and let me know as well down in the comment section what you found to be your mistakes. Okay. So I appreciate everyone tuning in. I'll see you all in the next video. But overall, hopefully you had a great day. And tomorrow's, coming to the end of the week. We do have a holiday weekend coming up. So be safe in the markets. I know it's been kind of tough. The markets change and we have to adapt as traders just as well. But take care. I'll see everyone in the next one.